Let's put down the following notes on non-assurance engagement. So write that not all services provided, not all services provided, not all services provided by the professional accountant, not all services provided by the professional accountant qualify to be assurance services, to be assurance services, to be assurance services, to be assurance services. This is because some of these services do not meet the criteria, for assurance engagement. Do not meet the criteria for assurance engagement. Do not meet the criteria for assurance engagement. Let's go, assurance engagement. Since all assurance engagements, do have the five basic elements, do have the five basic elements, i.e. a suitable criteria, a suitable criteria, assurance report, evidence/engagement process, evidence/engagement process. Next, subject matter. Next, the three-party relationship. Let's go to examples of non-assurance engagement. 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 So one, fraud investigation. Next, filing of tax returns. Next, bookkeeping. Next, tax consultancy services. Next, management consultancy services. Paragraph. The non-assurance engagement are divided into two main categories. are divided into two main categories. Number one, agreed upon procedures. Agreed upon procedures. Agreed upon procedures. Agreed upon procedures. Then number two, compilation, assignment, stroke engagement. Compilation, assignment, stroke engagement. Compilation, assignment, stroke engagement. Then let's start with the first one. Agreed upon procedures. 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 This is where a fractionaire, this is where a fractionaire is engaged, to carry out procedures, of audit nature, to which the fractionaire, the entity, and any relevant third parties, have agreed upon, and to report on factual finding, and to report on factual finding. The recipient of the report of factual findings, must form their own conclusion, full stop. The report of factual findings is restricted. The report of factual findings is restricted to those parties. The report of factual findings is restricted to those parties that agreed those procedures to be performed. Since others, unaware of the reasons for the procedures, may misinterpret the results. Yes. Since others unaware of the reasons, for the procedures, may misinterpret the results. Yeah. Let's go to circumstances where the services may be required. Circumstances when the services may be required. Circumstances when the services may be required. Circumstances when the services may be required. For one, investigating frauds and irregularities. Investigating frauds and irregularities. Investigating frauds and irregularities. The number two, in verifying insurance claims. In verifying insurance claims. In verifying insurance claims. In verifying insurance claims. Number three, in reporting on non-financial data. In reporting on non-financial data. In reporting on non-financial data. Let's go to number two, compilation, assignment, stroke, engagement. Compilation, assignment, stroke, engagement. Compilation, assignment, stroke, engagement. Compilation, assignment, stroke, engagement. This is where a professional accountant, this is where a professional accountant, this is where a professional accountant is engaged, is engaged to use accounting expertise, to use accounting expertise, to use accounting expertise, to use accounting expertise to collect, classify, and summarize financial information. Situation when the services is required include. Situations where the services is required include. Situations where the services is required include. Situations where the services is required include. Situation where the services is required include. So point one, preparing financial statements. Preparing financial statements from underlying records. Preparing financial statements from underlying records. Preparing financial statements from underlying records. Number two, compiling the tax returns for the client, the tax returns for the client, the tax returns from the client. Okay, so that's what you need to know for the non-assurance engagement. So have this subtopic, review engagement. Review engagement. Review engagement. Review engagement. Review engagement. Review engagement. So, in our previous class, we were looking at our services. We talked about there are types of certain engagement that can be performed by the practitioner. We can talk about what we call the audit engagement. Audit engagement. Audit engagement. That was the first one. The second one, there was attestation engagement. We had attestation engagement. Attestation engagement. Then the third one, we had what you call the review engagement. The review engagement. The review engagement. Now, the key elements in defining it was that when it comes to the audit, this entails the review or the examination of the financial. This entails the review or the examination of the financial statements by the auditor, where the auditor will be confirmed whether the financial statements will reflect a true and fair view. So the key element there was the review of the financial statements. Then the attestation engagement is any type of engagement where the practitioner is being involved to review what we call financial information. The financial information of to review the financial information. That's attestation engagement. Then you have the review engagement. The review engagement is when the practitioner is being involved to do a review of any type of information, any type of information, any type of information, any type of information. So this is it can be the financial information or the non-financial information. So those are the broad ways of distinguishing between these three forms of an engagement. So when you look at the review engagement, then also the difference between audit and a review engagement. So far, you can see from this one, it's about it focuses on the financial statements examination. Then the review engagement, it focuses on any type of what information. So there are also other bases of distinguishing a review engagement from an audit which you need to know. For example, the audit engagement will be done in accordance with what we call the ISA. Auditors will be guided by the ISA, the International Standards on Auditing. While for the review engagement exercise, it shall be guided by what we call the International Standards on the Review Engagement. That's what they need to follow. In terms of the level of the assurance that can be provided, under this one here, auditors are supposed to provide what we call the reasonable assurance. The reasonable assurance, or what we call the highest level assurance, normally provided under the auditor engagement. One in the review engagement is what we call the moderate or the limited assurance. The limited assurance will be provided by the auditor. In terms of the legal requirement, audit, most of the statutory audit is done to be the statutory obligation. So it's a mandatory requirement for the limited company. The financial statements need to be audited before they are published. Well, a review engagement is not done to meet any legal obligation, to meet any legal obligation. Then we have the extent of the audit procedures performed under a particular case. For the audit engagement, the practitioner will perform extensive audit procedures, which start, for example, the risk assessment, going to the compliance testing, the substantive procedures, analytical review procedures, etc. But for the review engagement, the nature of the audit procedures are very limited. Only to maybe an inquiry and analytical review procedures only. So let's look at the review engagement. A review engagement. So this is a review. This is a review. This is a review of any type of information, of any type of information, by the independent auditor, of the entity, by the independent auditor of the entity, The objective is to enable the practitioner. The objective is to enable the practitioner. The objective is to enable the practitioner to state whether on the basis of procedures, anything has come to his attention, to cause him to believe to cause him to believe that the financial statements have not been prepared in accordance with identified financial reporting framework. 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 Next paragraph. Review engagement is similar. Review engagement is similar to an audit engagement. Review engagement is similar to an audit engagement. But there are several differences. And I've put there the differences between a review engagement and an audit engagement. Differences between a review engagement and an audit engagement. Differences between a review engagement and an auditor engagement. Differences between a review engagement and an audit engagement. Differences between a review engagement and an audit engagement. Point number one. Point one. In a review engagement, we are talking between point forms. Point number one. Yes, in point forms. So number one. In a review engagement, limited assurance is provided. In a review engagement, limited assurance is provided. In a review engagement, limited assurance is provided. Whereas in an audit, reasonable assurance is provided. Reasonable assurance is provided. Point number two. In a review engagement, it relies on inquiry and analytical review procedures to gather sufficient appropriate evidence and not the test of details of transactions, risk assessment, and compliance testing, which are the typical procedures in an audit. Which is the typical procedures in audit. Which is a typical procedure in audit. Number three, The level of the engagement risk, the level of engagement risk, the level of engagement risk in a review engagement, is higher than in an audit, Next point. In a review engagement, the practitioner's opinion is expressed in a negative form. 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 And next point. Next point. In a review engagement, it is done in accordance. In a review engagement, it is done in accordance with the international standards on review engagement. With the international standards on review engagement. With the international standards on review engagement. With the international standards on the review engagement. ISRE, in bracket ISRE, while audit is done in accordance, with the international standards on auditing. When audit is done in accordance with the international standards on auditing. When audit is done in accordance with the international standards on auditing. In bracket ISA. So those are the differences between the review engagement and an audit. Last semester mlikuwa na Felix kwa class. You were with Felix. Come on. Yes. Ulikuwa na Felix ama ulikuwa na nani? Okay. You're also taking taxation. So Kandika, this subtopic, what you call engagement letters for assurance and non-assurance engagements. 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 So we do have the standard practice of accepting a nomination or appointment to perform the auditor work. Now, one of the very first stage of an audit is that what we call the engagement stage. Engagement stage of an audit, engagement stage. And this stage is the client acceptance of procedures. The client acceptance are procedures. The client acceptance are procedures. The client acceptance are procedures. If it's a matter to do with the audit, this is normally done in accordance with the ISA 210. For the provision that lays on matters to do with the client acceptance procedures, it is a 210. So you have been appointed or nominated by the client. There are those matters that you need to consider prior accepting the job. Prior accepting the job, there are those matters that you need to consider as a matter of trying to test your competency and the capacity to perform the job. It was said, you have the competency and the capacity to accept the job. So there's a part that you have to consider. One, you need to consider if you have more time. Availability of time, very important. Yes, you have been contracted, you have the time to devote to the client work. The other one, you need to ask yourself if you have the adequate resources required. Adequate resources are required, both maybe the money and the human resources and the human resources. You have enough staff to be able to support you in doing that job. You also need to consider things like the skills availability. You having staff with the required skills to be able to do the exercise. You also have to consider things like before you accept that one, you need to consider what we call the professional clearance. Professional clearance. The professional clearance. Professional clearance is the aspect of now communicating with the previous auditor or the previous accountant, if there is any. As a matter of professional courtesy, the incoming and the outgoing auditor should always be communicated. Now that communication is very important in the practice of the accountancy. Like one, you'll be able to get more information from the previous auditor. Where previous auditors have assist the working papers from the previous audit. And this one can assist you to plan the audit and also be able to understand the client entity. The previous auditor can also share with you certain information which can be very important in your future engagement with the client. The other number 5 matter that you also need to consider, away from the ones that we mentioned above, you also need to consider what we call the management integrity, the management integrity. The management integrity. The management integrity is a very important factor to be considered. You need to go to the level of the integrity of the management. Are they very honest people? Are they very sincere in the way they are managing the company or the organization? Are they truthful when it calls for maybe a disclosure of a given information? You should be able to ascertain that one before you say yes to the client. The other one that's so very important you need to consider as another very important factor is maybe the legal laws governing the entity. The legal rules, so the legal laws and regulations governing the entity, you should be conversant with them, checking whether, for example, can they be compliant with the various laws and regulations. The other one, you have to also look at the reputation of the firm, reputation of the firm's property, or the reputation of the client. The reputation of the client will also be very key before you accept the job. The other thing that you also need to consider is about the fees you're going to charge the client. The fees you're going to charge the client. Then once you're done with this what's upper, then those procedures are after. After you now say yes, you have ascertained this particular part of the upper, and you've confirmed over yes, you've got a competency and capacity to perform the job. So next go to what you call the procedures what? After accepting what? The engagement, you're saying yes to the client. So those procedures are after. Like on the after upper, on the upper company audit engagement, you need to confirm the reasons why the previous auditor was removed from the office. Did they follow the valid procedures in the removal of the auditor from the office? And that one can be making references to the minutes of the shareholders. And by what it passes all resolutions, indicating or giving that intention of removing the auditor from the office. The other matter that you also need to confirm is about your appointment, whether it's valid. So again, you consult the shareholders minutes to confirm if a resolution was passed by the members and the effect of your appointment. The other matter that you also consider is very important, what we call the precondition of the engagement, the precondition of the engagement or the audit. The precondition of the engagement, we consider that very much important. Now, in the precondition of an audit, there are things that we will be evaluating. We will be evaluating as per the standards requirement. Utakuwa evaluate as per the standard requirement as far as the preconditions of an audit are concerned. Like one, you must confirm whether the financial statements of the client or that subject matter of the client is prepared in accordance with applicable financial reporting framework. They prepare the financial statements or the subject matter based on the identified financial reporting framework. That's the first thing as per the precondition of an audit. The second one is about the management responsibility. Their responsibility. You need to confirm to the managers if they acknowledge it is their responsibility to prepare the financial statements that do reflect a true and fair view. Are they aware of it's their duty to prepare the financial statements which do reflect a true and fair view? The other one is what we call the internal control system. You need to confirm to the from the managers whether they do acknowledge that it is their responsibility to put in place good internal control system, the systems that are very effective when it comes to detecting error, detecting and preventing errors and fraud. The other thing that you also need to obtain to the management is what we call the draft accounts, Confirm with them if they will be providing you the draft accounts on time. If they understand that they need to provide you with the draft accounts on time so that you're able to complete the work within the time. The timelines are set. The other matter is about what we call the unrestricted access. Unrestricted access. So these managers, they should be aware of you as an auditor, you should be granted unrestricted access to their records or their books of account and also their premises at any given time. I have the other one about what you call information. Whether they know they need to provide you with all information and explanation if necessary for the audit. So those are the matters that you need to establish if they actually do exist as the precondition of what? Of an audit. Very important. If this one is missing here, then you may consider not to continue with that engagement. The other matter is about now drafting the engagement letter and sending to the client, both for the assurance engagement and the non-assurance engagement. This letter is very important for sababu the contractual letter. Engagement letter is a contractual letter. It defines the kind of relationship between the practitioner and the client. Now, for your engagement letter, one of the things that are very important for it, that the letter must be able to state. Like one, it will tell you the purpose. What is the purpose of that engagement? What's the purpose of that engagement? Like company assurance engagement.